Okay, so we'll see some important questions, important concept questions from share capital. Okay, so let me read the question and then explain and just focus on question so that it will be easy to understand. So S Limited invited application for 3 lakh shares at 3 lakh shares at 10 rupees each at a premium of 3 rupees. So we can come to know that the share price is 10 plus 3, that comes to total 13 rupees. Usually the share price are bifurcated into application, allotment and call. But in this question we are having only another application and allotment together and first and final call separately together. You can speak, no issue. Okay. So I'm writing application and allotment is 7 rupees and then the balance amount is 3 rupees. So here there is no any allotment, so no any allotment because directly it is a call. So what is the call money? The balance amount. So total amount is 13. So 13 minus 7? 6. So 6 rupees is the remaining first and final call. In this first and final call, if you see, there is a security premium. How much is the security premium? 3. So 3 rupees is the first and final call and the remaining 3 rupees is a security premium. Remaining 3 rupees is a security premium. So that alone I will highlight here. Okay. Further. So proceeding further. So application received for 4 lakh shares, but company is having only 3 lakh shares. So whenever you are having a over subscription, so this case is a over subscription. So what is mean by over subscription? If company has offered only 3 lakh shares, but company receives more than 3 lakh applications, is called as over subscription. So whenever a company receives a over subscription like this, you need to do the workout. Another, you need to prepare one dabba. What is the dabba? Application allotment dabba. Okay. So application and allotment. In this application allotment, the bifurcation is also given. To applicant for 8 lakh shares, 8 lakh shares was allotted. It means a person who applied for 80,000 shares, the company is ready to give 80,000 shares. In second case, who has applied for 40,000 shares, company is not ready to give a single share also. It means it is a nil. In third case, balance applicants were allotted on the pro rata basis. This is the twist here. So first you draw the total column. You draw the total column. What is the total? Company received an application for 4 lakh shares, but company can able to accept only for 3 lakh shares. So there are 3 categories, 1 and 2 and 3. So what is the first category? It is 80,000 80,000. A person who has applied for 80,000 shares, it means they are going to get 80,000 shares. In second category, a person applied for 40,000 shares, he is not going to get anything. So it is a nil. And third is a balancing figure. What is the balancing figure? So 4 lakh minus 2 lakh, 2 lakh 80 or 1 lakh 20. If you subtract, okay, so one total is 1 lakh 20. If you do the total is 1 lakh 20. So the number of shares the company can has received is 4 lakhs, in which for 1 lakh 20,000 shares the company has decided what to do. And what is the remaining then? Remaining is 2 lakh 80,000. So how you got this 2 lakh 80,000 for third category? And I will just write it in the bracket. How we got this 2 lakh 80, which is 4 lakhs minus 1 lakh 20,000. This 1 lakh 20,000 is a total of 80,000 and 40,000. So a person who has received, a company has received 2 lakh 80,000 shares, but company can able to accept only for 2 lakh 20,000. The company can able to accept only for 2 lakh 20,000. How this 2 lakh 20,000 came? See, the total is 3 lakh, in which company has decided to allot 80,000 shares for first category, and the remaining is 2 lakh 20. Okay, va? Okay, fine. So this is the dabba you have prepared. So for this each and every dabba, you need to prepare a working note. You need to prepare a working note. First you prepare for this third category. First you need to prepare for the third category. So that is a working note number 1. Before that, you see a person in category 2 has applied for 40,000 shares. Whether company allotted any shares to them? No. So what we need to do? We need to do the refund. But we need to do the refund. Whether it is mentioned in the question directly? No. It is mentioned indirectly. It is mentioned indirectly. So try to understand the question and think from the company point of view. You want to observe this and it should be in your mind. Okay, va? So company totally issues a shares at 13 rupees, in which 10 plus 3, and then the application and allotment. Another application and allotment. Application and allotment money is 7 rupees and the call money is 6 rupees. The call money is 6 rupees? No. Actually the call money is only 3 rupees, including security premium they are collecting in the call. So the total call money is 6 rupees. Excess money hours received in application has been adjusted towards the first and final call. This is called as pro rata. What is mean by pro rata? If the company receives an excess money at the time of application, it will be transferred to the allotment. But in this case, it will not be transferred to the allotment, because company at the time of giving the shares itself, they are raising application and allotment together. If there is excess money, that excess money will be transferred to the first and final call. The excess money is transferred to the first and final call. If there is a extra money is there with the company, means that what the company should do, abdina, they should refund that money also in the case of over subscription. If it is a over subscription, it is called as pro rata. I will tell you detailedly when I am teaching the concept. So here there is an additional question, which further the question is continuous. Vijay, who belongs to category 3, was allotted 4,400 shares. Very important and confusing. Who was allotted 4,400 shares, then what we should find? What is the applied? And he did not pay the first and final call money, and the shares were forfeited. Out of this forfeited share, 2,200 shares were reissued at 7 rupees per share. Very easy and simple sum with a small journal interest. We will continue. The working note number 1. For working note number 1, we need to proceed for Vijay. Yarpa? Vijay. Vijay has been applied how many shares? We don't know. But how many shares he got allotted? 4,400 shares. First, why we need to find the applied shares? First, what is the ratio? Go and see in the dabba. This dabba is very important. A person who applied for 2,80,000 shares, they are going to get 2,20,000 shares. It means a person who has applied for 2,80,000 shares, they are going to get only 2,20,000 shares. So what is the extra money here? 60,000 shares money is a pro rata amount. This is the pro rata amount. This pro rata amount only is to be transferred to the first and final call from application and allotment. Usually it will be from application to allotment, but here it is application and allotment to first and final call. Okay, so clear very much. So what is the ratio? Abdina, a person applied for 2,80,000 shares, he is going to get to 2,20,000 shares. So come here to the working note of Vijay. A person applied for 2,80,000 shares, he is going to get only 2,20,000 shares. Okay, so he has got 4,400 shares. Then how many shares he could have been applied? We need to do the cross multiply. So cross multiply, how to do the cross multiply? So where x is equal to, this two things should be multiplied. X into 2,20,000 is equal to 2,80,000 into 4,400, where this is in multiply. If it is goes to that side, if it is goes to that side means it will become divided. So where x is equal to 2,80,000 into 4,400 divided by 2,20,000. So if you cancel, what are you getting now? 40, 40, 1s are, 2s are, then how much?
5,600.
5,600 shares. That means Vijay has been applied for 5,600 shares, but company has allotted him only
4,400.
Okay, so this is a very big calculation. So there are some tricks I am going to tell you. Listen carefully. Just to make this 2,80,000 and 2,20,000 into the ratio. So what is the ratio? If I make into a ratio 2,80,000 and then 2,20,000. So what is the ratio? So 40, 40 Gali. If I divide this in two table,
14,11.
2 1s are, 2 4s are 8, 2 11s are. It means 14:11 is the ratio. It means if an individual person who applied for 14 shares, the company is going to allot them only 11 shares. Same thing. He got 2,200 shares. How many shares he will get? So that if you multiply like this, you will get the answer. Enappa? 4,400 shares. Okay. Appo 4,400 shares means how many shares he could have got? Appo where x is equal to 4,400 into 14 divided by 11. So in 11 table, 11 ones are 11 fours are. So where x is equal to 5,600. This is also the easiest way to find the number of shares. So whichever is easy and convenient for you, you can practice. So what we found here is Vijay has applied for 5,600 shares, but company has allotted him only 4,400 shares, in which he has paid application allotment money. He did not pay the first and final call money. Okay, so understand this. I will make a small note here. Application and allotment, first and final call, called, paid. Company called for application allotment here, but he paid. Company called for first and final call, he did not pay. Okay, so what is this? So company will become sad. Company will become sad. Okay, why company becomes sad? Because he did not pay the first and final call. Okay, we will make a working note here. How much rupees at the time of application and allotment he could have paid? 5,600 into application money. What is application money? 7 rupees. So 5,600 into 7. What is the money he could have received?
39.
39,200. But company will take all the money? No. The company will take money only for allotted. How many shares the company has allotted? 4,400 into 7. That comes to how much? 4,400 into 7.
30,800.
30,800 only the company will take. So what is the difference between 39,200 minus 30,800? 39,200 minus 30,800.
8,400.
Which is 8,400 is the excess money. This is what we did now is we have found the excess money. What is this excess money? This is the excess money where it should be transferred to the allotment. See, this is a complicated thing. This what we did is we found multiplication and then we did. So it is called as simply inverted L method. It is called as another inverted L method. But I am going to teach you the L method. So it will be very easy to find the excess amount. How to do that? He has applied for how many shares? 5,600. You directly subtract shares. 5,600 minus 4,400, how much? 600, 1,200 shares into 7. So 1,200 into 7, how much you are getting? 8,400. This is the easiest way you can do it to find the excess amount. Clear? Okay. Why we found this excess amount? When the company tried to call Vijay, company is trying to call Vijay, and Vijay answered the call. Vijay said, the company said to Vijay, Vijay sir, you have applied and you are holding 4,400 shares. You need to pay the money for 4,400 shares. So Vijay said, sir, at the time of application, I have applied and paid money for 5,600 shares. But you guys have allotted me only 4,400 shares. So there is a excess amount in my account. It means my money you are having in your account. Who is asking to whom? The Vijay is asking to the company. For 1,200 shares into 7, that is 8,400 rupees is still pending in your account, belongs to me. So subtract that amount and tell me how much I need to pay. Okay, so company said, okay sir, yeah, you have paid, you are under pro rata case, and I will tell you how much amount you need to pay. So at the time of, so company did the working note, first and final call. Company want to receive 4,400 into 6. 4,400 into 6. That comes to how much? 26,400 rupees. 26,400 rupees. In which how much excess amount the company has already is holding? 8,400. So if you subtract 8,400 from 26,400, which is 18,000, company need to receive in his bank account. But whether company received? No. Company received? No. So this money is calls in arrears. What is calls in arrears for the company. So company called him again. Sir, company said, sir, Vijay sir, you need to pay me 18,000. But Vijay sir said, I will pay later. And after that, company tried to contact Vijay, but Vijay said, I am not willing to pay. You cancel and forfeit my shares. Okay. So company becomes sad. Company becomes sad. And then keep on calling him. Vijay is not at all responding. So company started crying. Why company started crying? Because 18,000 the company has not received. So this is calls in arrears. At which time? At the time of first and final call. One working note to over. Now we will go for the second working note. What is the second working note? For finding the what is the pro rata amount, that is total amount transferred from application and allotment to the first and final call. So what is the first and final call application allotment money? We need to do the working note number 2. We need to do the working note number 2 for category 3. For category 3. Okay, so before this I want to clarify here what is the amount which he has paid and what is the money which he has not paid. Totally he want to pay in this 3 rupees, so in this 6 rupees, 3 rupees belongs to security premium and 3 rupees belong to security premium. So what is 4,400 into 3?
13,200.
4,400 into 3 comes to 13,000. 13,200. So 13,200 for first and final call, and for security premium 13,200, in which he is having excess amount of 8,400. This 8,400 first it should be set off with the share capital. First it should set off with the share capital. So what is the total amount? 8,400 you need to do subtract here. So being it is why we did this abhina, whether any partial amount received from security premium? No. So this full security premium is a calls in arrears. So I will write the forfeiture entry here itself so that it will be easy for you to understand how to write the forfeiture entry also. What is the journal entry for forfeiture? Equity share capital, security premium account debit. Security premium account debit to forfeiture account to calls in arrears account. So how much rupees he need to pay? First of all, he need to pay money for 4,400 into 10. Correct? Always remember, in forfeiture we need to put a called up value or face value. We need to put a called up value and face up value excluding security premium. And when this security premium we should put, when security premium
not
is
paid.
not received by the company or not paid by the shareholder, at that time only security premium we should debit. In this question, security premium will come, yes, it will come, because in this Vijay did not pay the first and final call, so security premium entry will come. About what is the amount he need to pay? 4,400 into 3 rupees he need to pay. Okay, in which what is the total amount we should write here? 4,410, that comes to 44,000. 4,400 into 3,
13,200.
13,200. So what we should write it in the forfeiture?
Yes.
You keep it like a blank. And what will come in the call scenarios? For this purpose only, we prepared the working note number 1. So in working note number 1, what is the call scenarios?
18,000.
I drawn the symbol, the company is crying. So why I have drawn this? In order to identify the answer easily. Okay, but don't draw this in exam. Okay, for your understanding purpose, I am drawing this. Okay, you write only call scenarios is 18 rupees. Okay, so this 18,000 rupees, not 18,000 rupees, it should come in the credit side. So easiest way I will tell you. What is the total of debit? The total of debit is 44,000 plus 13,200 is 57,200. So 57,200 minus 18,000,
39,200.
39,200, which is nothing but the balancing figure of debit minus credit. But don't tell to the invigilator you have found it in the balancing figure. So don't write here balancing figure. For understanding purpose I am writing here. Okay, but how to find how much he has paid, how he paid 39,200? Go and check what are the amount he paid. He paid at the time of application is 30,800. He paid 30,800 at the time of application, and further how much he paid? 8,400. என்ன சொன்ன? 8,400 he paid. Actually he did not paid. Okay, it was did the set off. Okay, it means the total amount which he paid is 39,200. This is how, so we have to cross verify. This is how we need to do the cross verification. So forfeiture entry got over, and moreover I will do the reissue entry also here itself, so that it will be very easy. So what is the reissue entry? Also write the narration, being Vijay share has been forfeited. Okay, and then reissue entry. So go and see for what is the reissue condition they are given. The company has reissued 2,200 shares for 7 rupees. For 7 rupees. So what is the reissue entry?
Forfeiture account debit.
So before that, you just tell me whether the shares has been reissued at a premium or discount or para. It is reissue at a discount, because the company reissue at 7 rupees.
Yeah.
So it means company reissue the shares at a discounted price. So
yeah.
what is the journal entry? Bank account debit.
Forfeiture account.
First always write the basic entry, bank account debit to equity share capital account. In equity share capital always face value should come. What is the face value here? 2,200 into 10 rupees. But company received only 2,200 into 7 rupees. So what is the balancing figure? 2,200 into 3 rupees is coming in the debit side. This debit side, what is this? It's a discount. So you can write discount on issue of shares. But Companies Act says it is a discount, but shares should not be issued at discount. Being shares should not be issued at a discount. What the Companies Act says is, anyhow you could have received the money from the first hand owner. You subtract this loss from that first hand owner's money. So where we transfer the first hand owner money? The temporary account called forfeiture. So whenever you are writing a forfeiture, creating a forfeiture entry, forfeiture is credited. So when we take money from that, it should be debited. When we take a money from that, it should be debited. So forfeiture account debit. So what is the 2,200 into 7?
15,400.
15,400. What is the loss amount? 2,200 into 3?
6,600.
6,600. What is the 2,200 into 10? Which is 22,000. It means company should receive 22,000 from the second hand owner, but company has issued a shares at a discounted price, so that is 7 rupees. So there is a loss of 6,600. So what Companies Act says, actually, if the first hand owner did not pay and left the company, company won't return back this money to the first hand owner. Company will keep it. So company ke this amount is a profit, but not a full profit. If there is any loss on reissue, that loss is to be subtracted, and then remaining amount only it should be transferred to the capital reserve. Why it should be transferred to the capital reserve? Because it is a temporary profit, it is a revenue profit or else capital profit. It is a capital profit. What is meant by capital profit? You will receive any one time, okay, not regularly. So it is a capital profit. So how to transfer? You just tell me. The total forfeiture amount is 39,200. What is the loss on reissue? 6,600. So if you subtract 29,000 minus 6,600, what is the remaining amount? 32,600 should be transferred to capital reserve. This is what you could have been thinking. Actually, the forfeiture amount is 39,200, in which the loss on reissue is 6,600. It means remaining amount is 32,600 should be transferred to capital reserve. So is it correct? No, wrong. Why it is wrong? Because in forfeiture there is 39,200, which is the profit amount for 4,400 shares. Being this is a partial reissue. What is mean by partial reissue? Company forfeited 4,400 shares, but company reissuing only 2,200 shares. So whenever there is a partial reissue, we should find the proportionate profit. We should find the proportionate profit. What is mean by proportionate profit? How to find it? We'll see here. For 4,400 shares, there is a profit of 39,200. Company reissued only 2,200 shares. So what is the profit? Okay, so you do need to do the cross multiply, where x into 4,400 is equal to 39,200 into 2,200, where x is equal to 39,200 into 2,200 divided by 4,400. Ones are, twos are, two ones are. If you cancel it, you will get 19,600. Is a profit for 2,200 shares. It's a profit for 2,200 shares. Okay, it's a profit for 2,200 shares. So what we should do with this 19,600? There is a loss on reissue. What is the loss on reissue? Is 6,600. And now this 6,600 need to be subtracted from the profit of 2,200 shares. Now, the profit of 2,200 shares. Okay, so subtract 6,600, that is loss on reissue. Loss also we can say discount on reissue. Discount on reissue. If you subtract, how much you are getting it now?
13,000.
13,000 is the amount which is to be transferred to capital reserve. You can cross verify the answer. If it is transferred to capital reserve, the journal entry is forfeiture account debit to capital reserve. Okay, so far what we have completed is forfeiture entry, reissue entry, capital reserve entry. Sir, is it enough if you found only this 3 entry? No. Now only the game starts. What is the game? Finding the money for application allotment and first and final call. That is very easy. What is it? We want to do the working note number 3. What is this working note number 3? Calculation for calculation for pro rata, okay, and first and final call, okay va, finding the receipt money of first and final call. At the time of application and allotment, company received how much rupees, how many shares? 4 lakh
4 lakh
shares.
shares.
So 4 lakh into 7 rupees comes to
24 lakhs.
20
28 lakhs.
28
8 lakhs.
lakhs, okay va. So it's a 28 lakhs company want have received, but company will take money only for 3 lakh
21 lakhs.
shares. That comes to
21
21 lakhs.
lakhs.
So if you subtract, what is the remaining?
7 lakhs.
7 lakhs is the excess amount in which company has did the refund. Some proportion of amount company has did the
40,000.
refund. What is the refund amount?
40,000.
That also you need to do 40,000 shares into 7 rupees. Why 40,000 into 7? People are paying for 4 lakh shares, 7 rupees application allotment. And now what? How much we need to do refund? 4 lakhs. Actually, what is this? Category 2. We did know one dabba.
Yeah.
In this dabba, this is that 40,000. So what is in question? They mentioned applicant for 40,000 shares. It is nil. It means we are not at all giving a single share also. Whatever they have paid, we are going to do the refund. We are going to do the refund. So do that. So how much we are going to do the refund?
40,000 into 7.
40,000 into 7 comes to
2 lakh 80.
2 lakh
80.
80,000. So 2 lakh 80,000 also we need to do the subtract. Okay. So the refund money 2 lakh 80,000 gone. 2 lakh 80,000 we need to do the refund. So after refunding, is there any excess money?
Yes.
What is the total excess money?
4 lakh 20.
Okay, 4 lakh 20,000. This 4 lakh 20,000 is a pure pro rata amount. It's a original excess, that is pro rata amount, which is to be set off against the next call. What is the next call? First and final call. So you need to write first and final call. What is the amount the company need to receive at the time of first and final call? Company want to receive for 3 lakh rupees, 3 lakh shares, the company need to receive 6 rupees. That comes to how much?
18.
எவ்வளோ வருது?
18.
18 lakhs. How much is coming? 18 lakhs company need to receive. Company need to receive 18 lakhs, in which there is a pro rata amount that comes to 4 lakh 20,000 shares. That comes to 4 lakh 20,000 shares. So what is the remaining amount the company should receive?
13 lakh 80.
13 lakh 80,000 company need to receive. But whether company thought company will receive this amount at the time of first and final call in bank, but company has not received. Why? Because of working note number 1. What is that? Calls in arrears of Vijay. How much is the Vijay calls in arrears amount? 18,000. Another person, 18,000. So the company thought company will receive 13 lakh 80,000, but company will not receive 13 lakh 80,000 because there is a calls in arrears of Vijay. How you know that? In question it has given, because of him only we did this much calculation, and we found there is a calls in arrears where you can easily identify by reaching the company is crying. Okay, so 18,000 company has not received, so this is the calls in arrears. This is the calls in arrears. So how much has remained when the company has received? 13 lakh 62,000 only the company will receive in the bank account at the time of first and final call. first and final call. Okay, so can we go and check, or else directly from here itself we can write the journal entry. Here itself can write the journal entry. At the time of application, what is the journal entry? Bank account debit. Bank account debit to
Equity
share application and allotment account. Or don't write in short form, write in full form. So what is the total amount received? 28 lakhs. 28 lakhs. But there is a bifurcation in which how much amount is need to be transferred to pro rata? 4,20,000. How much amount need to be refunded? 2,80,000. So go and see the right side, the second journal entry. Out of this 28 lakh, the journal entry is equity share application and allotment account debit to equity share capital to equity share first and final call to bank account. There are two ways to do. First, you can write equity share first and final call, or else you can write calls in advance. Calls in advance. If you write calls in advance when you are receiving, at the time of setting off, you should write calls in advance debit side. When you are receiving it, it should be credited. When it is set off, it should be debited. But if you write equity share first and final call, it means the money is directly transferred to the first and final call. Okay, va? So anything you can do, but remember the journal entry. So what is the total amount? Equity share 28 lakhs. But how much only company can able to take? 3 lakhs into 7. That comes to 21 lakh only company is allowed to take. What is the remaining part? What is the amount of transfer to pro rata? 4 lakh 20,000. So how much is the refund part? What is the refund? 2,80,000 is the refund. 2,80,000. 80,000 is the refund part. So this is the full set of journal entry for the second one. So we'll go and cross verify answer. The first journal is bank account debit to application and allotment, and the second entry is share application and allotment account debit. Application allotment account debit to share capital to calls in advance to bank account. Here they have written in calls in advance. Can also write another. Can also write equity share first and final call. Okay, if you write first and final call here, you can directly write here bank account debit. I will write in the notes itself. So what is the journal entry for receipt entry for first and final call, which is equity share first and final call account debit to equity share capital to securities premium account. What is the total amount here? 3 lakhs into 6, 3 lakhs into 3, 3 lakhs into 3. What is the call entry? Equity share capital first and final call to equity share capital to security premium. What is the amount?
18 lakhs.
18 lakhs. 9 lakhs. 9 lakhs. This is the journal entry. And what is the receipt entry?
Bank account debit.
Bank account debit. Calls in arrears account debit to equity share first and final call account. Company want to receive 18 lakhs, but in which already company has received how much rupees? 4,20,000. Company has already received the excess pro rata amount of 4,20,000. So how much only it should be credited? 13,80,000.
13 lakh 80.
13 lakh 80,000. But in bank, how much only it has been received? 13 lakh 62,000. 13 lakh
62.
62,000. So what is the calls in arrears?
18,000.
18,000. You can write like this. Another, you can write like this, or you can write a detailed entry also, like company want to receive 18 lakhs. If it is a calls in advance is 4 lakh 20, and there is a calls in arrears is 18,000. And by this, the sum is getting over. Okay. So for doing a single entry, a single share capital, it took 40 minutes approx. But this sum you should do in 15 minutes in exam. You can able to do. Okay. Thank you. Go and practice.